downstream products that affect you and I on the streets.
Watching a lot of things, obviously, and Jeff kind of alluded to this, and we're looking in the commodities pits about the topic of oil. A couple of refineries shut down, obviously, in New Jersey and Pennsylvania. Right now I want to bring in Adam Connors to talk about the oil picture in particular with these refineries, and hopefully they're going to get moving and back up to speed. We're not seeing a lot of movement in the crude market because of it, but I don't know, Adam, the hurricane season is young, correct?
The hurricane season is young, and obviously we see a lot of things that don't typically attack the East Coast as much as the Gulf. And so for natural gas prices as well as just crude and refinery products, regionally it seems to be affected. However, Irene was definitely a little bit more bark than bite at this point. And so we've seen from the regional disturbances that we would anticipate when it comes to the refined products and the more downstream products that affect you and I on the streets. It doesn't look like it's going to be an issue this go around.
Adam, what do you see? What is your forecast for the price of crude? I mean, we're still in that $80 to $90 range, which is nice to see in a way for retail gasoline prices. Of course, the summer driving season ends in a week. But what are you seeing as far as your targets for crude right now?
Sure. Our analysts are estimating and keeping a price deck of $90 at CK Cooper. And so we're anticipating that for all of our, when it comes to our modeling, both macro and micro, when it comes down to the companies. And so $90 is what the price has been at actually even through the peak. And they're still maintaining, I spoke with them this morning, they're still maintaining that $90 is where they feel comfortable at when it comes to their modeling purposes and where we're estimating things at CK Cooper.
You know, Adam, one of the questions, and I think it's still a very valid question, is the global economy. We've been watching growth in inflation concerns in China in particular. We've seen inflation concerns in India. All of that affects, of course, the global trading picture for oil. And then let's talk about the disturbances in the Middle East with the Arab Spring. If we continue to see these disturbances, in particular in the Middle East, we continue to see growth projections lowered a little bit for China, for India. What does that do to crude?
Sure, it does a lot of things, actually. And we saw the recent spike actually did it happen with the unease in the Middle East, and that's what sent things up pretty high in the upper 120s. And so though Brent has still been, from Brent on the European side of the oil picture, is still remained relatively high. We've seen WTI and the NYMEX futures here on the state side actually remain or get back to the lower levels here in that $85 to $90 range at this point. So those macro pictures, such as India, such as China, those things have a very long-term effect when it comes to the overall support that we have at CK Cooper for the bullish side of oil. And then also the recent data and information that we've seen on the consumer side in the States driving the local crude picture as well, which we saw a little spike just here recently. And so those are the factors that we're all watching. However, they still play into what we call essentially a support in oil prices at this point. And we think the long-term prospects for companies is pretty strong.
Adam, what about stock picks? I mean, there's so many companies that you could follow. You've got your refiners, you've got your energy companies. Give me a couple of stocks that you're watching that our viewers should be watching right now.
Sure, you got it. I'll give you two very specific ones. One's on the larger side, one's on the lower side. So on the larger side, we like EOG Resources. EOG is on the pioneer, and they're usually on the forefront, and especially very nimble for such a large company, about $25 billion or so. And they've actually been able to have a strong foothold in all the emerging shales. And we hear about these shale plays in the United States as well as internationally. But in the United States specifically, they're getting a lot of traction with being able to crack the code, if you will, of being able to unlock the hydrocarbons within the sedimentary and geological rock formations. And so we believe they're a great company long term. They had a pretty good pullback, just like the other company I'm about to talk about, when oil prices took a step back, and we feel they haven't fully recovered yet. So definitely keep that one on the radar. The other one is actually an interesting trade called Northern Oil and Gas. They actually are about $1 billion company, which would be on the smaller side, but they focus exclusively in the North Dakota, Montana, Bakken Shale, which we think has a long-term play in the United States, has done a tremendous job, not only producing jobs in the area, which the USA Today actually put out today as having one of the best unemployment rates as well as surplus in the states, but also just the long-term prospects. I mean, the company only has 11 employees, and they were the victims of an online smear campaign to basically discredit management as well as their accounting. The audit firm that they had. They brought in Deloitte. We've done our own work, and we feel as though this is a really good pick. And there's still only 40% short interest in the company. So definitely want the long-term prospects in mind.
Interesting and very intriguing as well in that last pick. Adam Connors from CK Cooper. Thank you.